You're locked in to the Grain Market Talk podcast. Fast updates, market movers, and the grain news you need right now. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
Today is February 13th. We got Friday the 13th today, Jaden. May the luck be ever in your favor here towards the rest of the trading week. But let's start off with the grain recap, just what the week looked like here. We're going to go over a little bit of the soybean rally, talk about that as that's red hot. We're going to talk about the WASDE report we had this week, talk about a little bit about some interesting articles that we had come out Wednesday afternoon, kind of give some life to the soybean market as well. Talk about corn versus soybeans and the relationship and planning decisions and profitability. And then we're going to finish up with crop insurance and how we're tracking through the middle of our averaging period. So, all right, let's get it. Soybean rally this week, Jaden. What can you tell us about what soybeans have done so far this week and last week here on this rally? Cade, pull up that chart on the screen for our listeners here on the soybean rally.
Yeah, Mike. So from last week's close, we're about 18 cents higher in the week on July soybeans. So new crop continues to lag behind, so the funds continue to kind of pile into these old crop months. Continues to be, headline driven, as we know. It's kind of like the cattle market, I guess you could say. It seems like, we did drag corn along for the ride yesterday, but corn really hasn't done a lot besides yesterday.
Yeah, so July soybeans up on the screen there, really showing that we've recovered most of what we lost after the first China news that came out there last fall through kind of November highs. Some of the front months, we got a little bit more of a ways to go anyways. I know November back there only about 15 cents to those old highs. So we've recovered a really decent amount of the rally that we've lost. Really, I'm calling this a bailout. Basically, like if I didn't sell soybeans on that rally last time and we were worried about getting that back, I would sure be thinking about that right now because I feel like I'm getting bailed out on any long positions or cash soybean positions at this point. What can you tell me about a few of the main drivers behind this rally that we've seen since really the second-ish of February here?
Yeah, Mike. So last week we had President Trump come out with a Truth Social tweet that China will consider maybe buying around 300 million more bushels this season, whatever this season means. But just for reference, our ending stocks are only 350 million bushels. So that makes our, old crop ending stocks and soybeans in a really tight situation. And we kind of had some continued follow through on this week regarding that. We did have the South China Morning Post post an article that Trump and Xi are going to meet here in April, and it sounds like there's rumors of maybe they'll, continue their trade truce another year, and that caused us to gap higher Wednesday night there on the opening trade.
Looks like this morning or last night we filled that gap here now to the downside after we put that in. Now, the truce is friendly. The increase in buying 8 million metric tons would be friendly. It's a little hard for me to picture the fact that you went from zero sales to China back last fall, and you said they're going to buy 12 million metric ton. So 0 to 12 in a timely manner. Got done probably faster than what we would have figured it would have been for that agreement going back there. I think that was a bigger deal than if they went from 12 to 20 million metric tons. Me personally speaking, I thought that should add a bigger market impact. So for us to really go set new highs on the soybean market, I feel like there's something else probably, or the fact that they're really just trying to pile into commodities right now. Now, here's one thing that I find interesting. We've seen what silver did recently, or gold. We saw what cattle did the last how many years. You see a U.S. dollar that's selling off aggressively as many of these countries, including China, are selling off U.S. bonds and pushing that U.S. dollar lower. And one of the things they're doing in that time frame is going into commodities. So you sell off the dollar, buy U.S. exportable commodities, and soybeans have had the hot hand. Last week you had Trump talking about their increased sales. You have a somewhat tight balance sheet on soybeans compared to the other grains, so that's helping out as well. And that's where the fun money flow's been. And you can really see if you look at a chart, look at the first few months of soybean contracts, the funds have been piling into the first 3-4 contracts very aggressively, while new crop soybeans, Jaden, haven't really moved much considering the news that we've had compared to at least the front. So I find that interesting because this afternoon, when we get the commitment of traders report to come out, I am going to be very curious to see where they're going to be sitting on managed money longs on soybeans here this afternoon, which would be as of Tuesday this week. So a pretty big portion of at least last week's move there, that's all going to be factored in on the managed money side. That'll be very interesting to see what kind of legs this soybean market has under it, I think, going forward.
I think that's an important thing to note, Mike, because, I mean, the last time we made our highs here in the middle of November, we were 230,000 net long on the fund position. So, I mean, we're only like 25 cents off those highs. So,
and that was near a record net long position for managed money.
I think a record longs around that 280 area. So, if we're, above 200, above 150, well, that kind of tells us why this rally's been happening, and maybe we could be a little overextended here at these levels.
Certainly. Cade, can you bring up the WASDE report from this week as well? Because we did have one of those. Now, it feels like forever ago, and it didn't seem to have much of a marketing impact. But one thing we did see in this report was, one, soybean balance sheet, we'll make that short and sweet, didn't change at all. And that single column in the U.S. balance sheet changed. On the corn side that he's got on the screen here, you can see highlighted yellow. Total exports for this crop marketing year. It looks like we moved that up 100 million bushels in this report, just barely tightened up ending stocks just a smidge. Given what we know, that was a very anticipated and easy thing to get behind for them to move that 100 million bushels higher. It makes sense given the current export pace that we've had. I think it's very relevant. To make that number happen, it's a really big number. We got to have really good follow through the rest of the year to make that come to fruition. So continue to keep an eye on the demand side of the category because ethanol and exports are running strong, but we have pretty lofty expectations in that report now. So when I look at the balance sheet, other than that, 12.9% stocks to use ratio, very in line with the lower to mid fours on futures that we've had historically. So I think futures are priced accordingly to what our balance sheet gives us here today on the WASDE report.
Yeah, okay. Do you want to pull up a little note that the USDA had on there? I sent to you on Teams.
Yeah, so no changes on the soybean balance sheet, but we did have some interesting language regarding the front page of the WASDE report that they give some notes, just a little bit of wordage there in that report there that Jaden will have highlighted yellow right there. So what can you tell us about what they came out with?
Yeah, so I think it's really interesting that the USDA put this in as a little side note. So yeah, like Mike said, the soybean balance sheet didn't change at all. Really all we saw for a change for soybeans was an increase in Brazil's crop by 2 million metric tons. But it's interesting to see that the USDA would come out here and they basically, acknowledged that the possibility of increased China purchases. But they said, we still got the same global ending stocks. I mean, if they're basically just saying it's a game of musical chairs. I mean, we'll probably not export as much to other countries, basically what they're saying.
Interesting. I find it a little hard to believe, but I do think it's worth noting that just because, let's say this would happen, if China did come in and start buying a bunch of extra soybeans today, the market's going to recognize that, and we're probably going to push the soybean market pretty high in the meantime if that's going to be the case. So very interesting language out of the USDA, at least regarding soybean exports potentially. The one thing I do want to get into here as we start to kind of wrap up would be I want to talk about the relationship of soybeans and corn that we've had. I sent a couple exports to Cade here, an Excel page just showing what profitability looks like on corn and soybeans and the relationship between the two. So one of the things I want to talk about is after this week's rally that we've had in soybeans, basically, there's no significant difference now between planting corn or soybeans on your farm, Jaden, for profitability. It would show about, using Iowa State's data at this point, you're probably losing $50-ish an acre planting corn or soybeans, either one. So at this point, I think the relationship between the two up until this point has been favoring corn acres heavily. I think planting 95 plus million corn acres has been very, very talked about and relevant. Now I think that soybeans could be trying to buy a few acres here on this rally, and actually profitability between the two look very similar, in my opinion. Jaden, do you have anything to build off that as well?
Right, Mike. So, like, if you run some numbers around a local elevator in the area, like you said, we're losing, using Iowa State's expenses to keep in mind, you're losing about $40 an acre on corn, and beans you're losing around 50. I mean, that spread was a lot wider, I would say, 2 weeks ago. So soybeans really are fighting for some acres here in the last couple of weeks, and I think it's a really interesting time of the year to do it because, I mean, this is the time of the year we average our crop insurance price, and it looks like year over year we're going to have an increase in crop insurance, a floor put in there on the soybeans from 1054 last year, and corn a little lower than last year, but nonetheless, I think soybeans, they're trying their best to fight for some acres the last couple of weeks.
Yes, they are. Interesting enough, we're at 2.4. Soybeans are 2.4 times greater than corn right now. If you go back to about January, it was under 2.32, even before that under 2.3, going back to last fall. So the relationship between those two started to favor soybeans quite a bit again to try to buy some acres. This is the second time that we've done this relationship about to this point here. Last November as well, it was a very similar type ratio. Last thing we're going to wrap up with here this week, Jaden, would be crop insurance guarantee levels. Our pricing on the average has about halfway through here. What can you tell us about the averaging that we've had for next year's crop insurance?
Yeah, Mike. So like I said earlier, soybeans year over year looking like we're going to have a higher price by quite a bit here. Last year on Nove 25 soybeans, we were sitting around that 1054 level, and this year we're quite a bit higher than that, and kind of a different story on corn, about 10 cents lower so far. But I think it's, this time of the year you should come up with a good crop insurance plan. It's a good time of year to do it, and I think this year we got some products out there, county-based products that are really subsidized, compared to normal for the government. So basically you can ensure more revenue for your farm for the lowest cost ever.
All right, I like it. So moral of the story there for crop insurance, county products, highly subsidized, very cheap for you to chew, pretty much to get a very similar cost per acre last year. You can get way more coverage this year. I like it. It looks like a good move, especially with soybean averaging. It looks like we could be probably 40 cents higher than last year on that averaging time frame. So very interesting there. Last year, 470 on corn. It's going to take a little bit to get back up to that type of level. We're probably going to be 10, 15 cents off that at this point. So thank you for your time today, Jaden. We'll see how the weekend goes. Remember, everybody, Monday is closed on markets because of President's Day. So we'll open up Monday night on these grains. Tuesday next week will be the first full day. So thank you for your time.
Thanks, Mike.